For more market guidance, we talked to Phillip Hagedorn now. He is Chief Investment Officer for ATR Asset Management. Good morning, Phillip. Thank you for joining us today.
Good morning.
All right, so are you expecting more buy-ins today, considering it's a deadline for the FTSE rebalancing, or some holding off perhaps because of the Philippine Monetary Board meeting March 21st and some uncertainty from the U.S.-China trade deal?
Yeah, I mean, I think we don't expect to see too much on the FTSE rebalance. I mean, I think there are 4 companies, I think, that are impacted significantly: JG Summit, San Miguel, Food and Beverage, San Miguel, and Wilcon, I believe. But, you know, to make money, to trade on the rebalance news is very difficult. I think you need to try and understand why these companies are getting upgraded. And the way to make money is to do that early, not on the day of the trade or on the day of the rebalance. So Food and Beverage, for example, had a secondary offering last November. The stock is up over 20% from that offering, and which was not really, was kind of a lukewarm offering. And today people seem to like it. So, you know, it's very difficult to make the trade and make money on those rebalances, but to understand why they're happening is more important. Yeah.
Do you see investors holding off on trading because, you know, waiting for some direction from the Philippine Monetary Board?
I don't expect people to hold back. I think the Monetary Board and the new governor has been very clear. They're going to be deliberate. There's expectations that the overnight will not move, but maybe they will look at the reserve requirement cut as a first move. I think that's widely expected by the market. So right now, it's quite clear what they're telegraphing and messaging out, and I think that's probably in the price.
Phil, how are you advising clients now with their portfolio, with the economic growth forecast cuts from the government, and how they impact corporate earnings going forward?
Well, you know what, Kathy, that's exactly what we wanted. We felt that the government growth forecasts were too aggressive, that the current account deficit continues to widen, and one way to keep that in check is to just pull back on the growth optimism a little bit. Maybe a little bit of this is caused by delays in the budget and etc. But that's a blessing in disguise, actually. The Philippines growing between 6% and 7% will still be among the fastest growing countries in the world. It puts to the back burner any talk of overheating and a much more sustainable growth path. So I think this is welcome news, actually.
Yeah, but the Economic Planning Secretary, Ernie Burney, has said if worst case scenario, that reenacted budget lasts a whole year, growth is going to be at around 4%. I mean, is that still good news for corporate earnings?
No, that would not be good news. So, you know, the lawmakers need to get on it and pass this budget and get moving. I mean, maybe elections has something to do with that. So after May, things will speed up. But that certainly would be a negative. We're not anticipating that will happen. And if it does, it's really a disservice to all Filipinos.
All right, Phillip, some sectors are expected to benefit from the rate cuts that the Bangko Sentral or the Philippine Monetary Board may implement. How soon do you expect the rate cuts to be? Which sectors do you forecast to be benefiting from these? What's your outlook for the sectors?
Well, first of all, we're not expecting a rate cut yet. I think the probability of rate cut has gone up significantly. It's more likely to happen in the second half of this year, if at all. And we'll wait to see if that happens. I think overall, interest rates peaked in about October of last year, and they've started to pull back to a much more reasonable level. And what gives us confidence is many sectors, particularly the property sector, even the banking sector, but the property sector in particular, the capex plans for this year have just been ratcheted up, and that kind of shows you the confidence, I think, that company managers and business owners have and are looking forward to.
All right, we'll talk more outlook with Phillip Hagedorn, Chief Investment Officer for ATR Asset Management, in the coming minutes as the market opens. For now, back to you, Kathy.
I'll be back with you both in about 18 minutes. Thanks for that, Rain.
But we're back with Phillip Hagedorn, again, Chief Investment Officer of ATR Asset Management. Hello again, Phillip.
Hi, Rain.
All right, so we've been range bound for quite a while. Do you see any catalysts that we can expect might help us break out from the support or the resistance level, given the recent pronouncements also, of course, by economic managers at the DBCC? Where do you see the next support and resistance?
Well, I think this is a good opportunity, actually. I mean, our view for this year was we should trend towards 85 to 8,800 and be at an all-time high within the next 12 to 18 months. I think that's still in the cards. Earlier this year, we were already close to the 8,100 level, and the market's pulled back since then. I think this correction's healthy. We're encouraged by the fourth quarter numbers, which had just come out. Very, very strong earnings numbers in the fourth quarter. And our view for this year is actually a 12% earnings growth expectation. So should those earnings expectations be met, and I think the first chance we'll see numbers for the first quarter will be in about a couple of months, then certainly that's going to be the catalyst to get us above the 8,000 level for the first step. No?
And you're also waiting for an update on the budgets for 2019, as well as the next tax reform package.
Absolutely. I mean, I think those are very important parts of this puzzle. Clearly, the budget will drive and set direction for growth in the near term. I think the government expectation is 6 to 7% this year for GDP growth, and moving up to 6.5 to 7.5 next year. And that, should those expectations be met, I think that's a very sustainable, very good path. And that's going to drive earnings growth further north. So, you know, all of these discussions of reducing the reserve requirement, reducing interest rates, that's just going to add a premium to the multiple. So that's good news. And if it happens in a measured way, then I think that's going to put us closer to our 9,000 or all-time high target, closer than we think. So let's see how things pan out over the next few weeks.
All right, that's a good note to end on. Thank you so much for your market guidance, Phillip Hagedorn, ATR Asset Management Chief Investment Officer. We are grateful for your time again today.